And wow, what a match. We need some Rohit Sharma, Virat Kohli kind of batting for the markets as well, I guess.
See, the match in a sense, if you look at cricket, while it's a moment of celebration, it galvanizes the whole country, keeps you warm, but there is something to be learnt here. And there's something
the economy of it.
Yeah, I mean, nothing beats kum. So
yes.
I don't think it's going to move your GDP per se. I'll make, a few restaurateurs happy, maybe a few of your maybe movie theaters happy. Yeah, but it's the feeling which in a sense which just galvanizes the whole country. How a Saturday well spent, a Monday morning you'd feel like going, oh my God, you're the champions now. So it's a great feeling. You always delight to see India win. Yeah. But in terms of what I was just thinking through it, that we're so programmed to connect everything to the markets and to business right now.
I know. Especially this market.
Exactly. So how do you connect to the markets here? Like, who've been two stars for India? It's really been Rohit Sharma and then Virat Kohli. They are the real true.
And Shubman Gill has been the mid cap.
Exactly. Yeah. So, and then you got small caps, which are some of the young guys, the new spin bowlers, Varun and everyone. So, class is permanent, which is what I think India is. It's the class which is permanent right now. There are a lot of mid cap stocks, a lot of small cap stocks, which in a sense got discovered. Everyone got excited, and they really are. They need to recognize that those mid caps, by the time they will become large cap stocks, they will go through the whole ups and downs in terms of correction, business cycle. That's about it. But the fact that India has come back, that is class. The fact that the veterans did rather well this time, it is a clear indication of the opportunity. And the fact that mid cap contributed, it's a clear bent of patience and the new India.
Oh yeah, absolutely. And there are those minute bit of signs that we may be like oversold. The FI selling has trimmed somewhat, and the index as well. We've seen a bit of a bounce come in, at least in the last week.
Yeah, last couple of days have not been bad at all for India. And frankly, the large reason why Indian markets are looking stable. When I say stable, I think we need to recognize that the two factors which in a sense have really impacted the market mood. One was tariff. A lot of yes and no, a lot of yes, no, I don't know, I will do it, I will not do it is happening on the tariff front. Second, a lot is happening in terms of the US market. So the tariff front, markets are now getting stubborn. They said, okay, we will deal with it because a lot of yes, no is happening. And secondly, on the US market front, I guess cracks are clearly visible. US markets have started stalling, dollar index has retreated, crude seems to be going down. So the macro concern which was coming from global markets, both in terms of the risk off movement, dollar index, all that seems to be taking a backseat. And on the tariff front, sometimes no news is good news. And that in a sense seems to be really the factor which is at play now.
Let's just revisit what the global handover has been like before we move forward. For the US equity markets, it was a day of a rebound, at least on Friday. After, S&P's worst week since September, we finally closed in about over 200 points up in the green for the Dow. The S&P as well managed to eke out about a 0.5% or so gain. And the Nasdaq also managed to put up a good rebound. Over 100 points is the kind of move that you saw for the Dow as well. Asia this morning, Hong Kong is down about 1%. It's 0.5% lower for Shanghai as well. But the periphery markets are doing quite okay. Nikkei, which has been quite aligned to the way the US equity markets have been moving, that's holding up over 200 points as we speak right now. But GST, that seems to be, the big talking point over the weekend after the FM comments saying that perhaps there could be some GST rate rationalization which could be on the cards. The key proposals are, of course, aerated drinks, tobacco, which are currently at 35%. The gaming industry, we've all been talking about as to how hard it's been hit because of that high GST of 28%. And it's some of the luxury goods as well, which are currently taxed at 28%. That seems to be on the wish list right now. A lot of other, products as well, which seem to be on the cards for the GST rate rationalization. And this after, the finance minister saying that the government is close to finalizing GST rate cuts and tax slab rationalization. The revenue neutral rate, remember, had already dropped from 15.8% back in 2017 to 11.4% in 2023, and she expects that it's going to fall further. And I think that's going to be one of the big triggers for not just the equity markets, but overall economy.
Yeah, but how much of that would be approved instantly? How much of that will go through the minister, that entire council? That is still work in progress. Oh my God!
I told you so.
I know, you got the trend. Yeah, I was fully rooting for Team India.
Yes. Who was not rooting for Team India?
No, I mean,
think
he was the one who
He was
stuck
in his
neck
elements.
out.
Yes.
in
He was in his
market
elements.
parlance. Yeah.
Technicals were looking strong.
yeah, charts were looking very.
Charts were looking strong.
Breakout.
See, let it get implemented.
Yeah.
Ideally, you want GST rates to go down, because if GST rates they go down, at least the slowdown what we've seen in the economy. See, how can you stimulate the economy? There are only two ways you can stimulate the economy. You can do a tax, monetary or fiscal. The monetary action by Reserve Bank of India has already started. The fiscal action by government has already started. Government has two things which you can control. One is direct taxes, which is income tax, custom duty. Income tax has been lowered, so they've already acted on that. Second is indirect taxes, which is GST. That if it's lowered, it's going to act as a stimulus.
Yeah.
So government is now saying that, look, fiscal deficit is important, but it is not like we are really bothered about it, because there is a pace in the economy, and this direction is something which we are happy with. But if you cut out GST rate right now, which are surprisingly high, it takes care of the local economy in terms of stimulating demand. And second, this entire view that India, in a sense, had become very expensive, at least in the eye of global investors. Why? Because the tax structures here are very high. So it actually is a double advantage at a time when world is talking about tariffs. If your local tax rates are low, it's good. This will act as a stimulus to the economy, because government is doing whatever they can do now to really stimulate the economy. The monetary part has been taken care of by RBI. The fiscal part, which is stimulating the economy, you can stimulate the economy by giving freebies, which is not a good idea, or by giving tax cuts, which have already happened both in direct and hopefully in indirect also.
Yeah, absolutely.
If you like this video, then like, share and subscribe to ET Now.